Hey traders, it's Friday, December 23rd, 2022, back for a very quick recap. And today was a day I had to turn off the charts after what happened to me. I'm going to get into it in just a second. But first, I'm going to take a look at yesterday. I didn't have an opportunity to do a recap last night. I'm just going to keep it quick because I didn't really trade yesterday. I saw that the market was moving down aggressively and not pulling back. But I did want to just quickly note the rejection off of this volume imbalance. Let's take a look at what happened. Very quickly, we can see that price did not make it up to Monday's high that I was anticipating. At the time of my last recording, I didn't really notice this small little imbalance that was right here. And look how price peppered this level a number of times, marking the kind of the top of this swing before a rapid decline yesterday on Thursday. I did say that if we had gotten a close back below the weekly open, which we were holding most of Wednesday, that would get me to shift my view. And clearly, once we got the close below the weekly open and then the close below these swing lows that reacted off of this imbalance, once we got this close right here on this candle, just look at the rapid decline from that point. This didn't offer any support. I thought maybe there was a chance it could, but once this just melted through, it was pretty clear to see that it was a downward expansion day. Once we got to New York Open, we had already pretty much hit these lows. So if we look on the lower time frame, it was just a straight melt. Maybe could have looked at something on the lower time frames, but I didn't see anything. Also, yeah, right at the open, it just wicked up barely, and then sold off. A little bit of a bounce into the close, which framed my trade today. So we saw some repricing higher after taking out this low and hitting the extreme here. If we actually looked on the 4 hour, you can see that if I mark out the low here, it kind of tapped right into this. Actually, I'd prefer to just do it like that. So this was all from CPI, I want to say, and back in November, and then price came right down and finally filled in this big imbalance. So heading into today, the frustrating thing that happened to me on the lower time frame, we had the perfect setup. I want to first mention that we had a high impact news here, but then we also had another high impact news event here. So I'll just mark that out. High impact news, consumer sentiment, I think, which is related to inflation. So really quickly, at 7 a.m. West Coast time, so 10 a.m. Eastern, price had this big candle from the news, ranged around, took the low. Notice we have these three drives lower. 1, 2, 3 into our support area, and then saw a displacement through the short-term high, leaving this gap. And when I saw that, I had my order right here waiting to be filled, targeting, and I had the exact right target as well from this swing down, high to low. Where's our premium array? Where's our premium area? Internal liquidity. So this is a bearish trend down. So I want to be, and also we're bearish on a higher time scale as well from here. So I don't want to be aiming for new highs on this buy trade. I want to just target the imbalances that exist on this leg. So that was my target. Also on the 5-minute, you can see the imbalance there as well. So 3.3 R, I was more than happy to set my order here, but my mistake was not looking at the 2-minute chart. And I always say I like to look and see these imbalances on multiple time frames, 1, 2, 3, 4. And here, in basically the same general area. So that's the other thing that's key here. When you have two that are in the same general area, just go with the one. Don't be so picky about getting the perfect entry. That should have been where my limit went. The 1 minute gap didn't get filled. That's where I had my order. And then once I actually noticed the 2 minute gap, it was after it had sort of reacted from it. And I was just hoping for one more push lower back into it, but the market didn't give me that. And so I missed out on about 3% or so on that trade. So I was pretty bummed out about that, but that happens sometimes, especially if I'm on vacation. So not to make excuses, but normally I would be at my desk and I'd be, without interruption. And, I like to think I would have seen that on the 2 minute, but I didn't. I was only looking at the 1 minute at the time, and I missed out on that move. So what happened after that? So I thought we would get a pullback here, and I thought we might be able to buy here, but I noticed at this point that the S&P was definitely stronger of the two. So even if you just do a fib, take note, this almost came down to the 70. But if I look at the S&P, which I'm going to show you, you can see that this one, same kind of thing, just hit the 50. So the other one hit almost the 70. This one only came down to the 50. So I didn't set a limit here because I didn't know where it was going to come down. If you look on the 1 minute, I could have just marked out this gap and just done an optimal trade entry type thing. But in this type of situation where we're creating a downtrend into the level, I like to see some confirmation. And so I waited for confirmation on the 5 minute. You can see right here, it came down. Also, if I turn on the DR, got a confirmed close above. So any buy in here is high probability. And again, it didn't get filled. Price went to target without me. But again, same thing happened. If I looked at the 4 minute in the same general area, we get this gap. And that could have and should have been my entry, something like that. About 3R or so. So that's about 6%, 6R that I feel like I should have had today that I didn't have. And that was enough for me to say, okay, you know what? It's not my day. I'm not going to force a trade. I'm just going to close the charts basically and wait for another day. And so my takeaway from all of this is to remember I have to change the time frames. I have to look as these setups are forming. You can't just stick to one time. I mean, you can stick to one time frame, but this is what happens when you only stick to one time frame. And these are there's pros and cons to it. The pros of sticking to one time frame is you're not going to have any confusion or any second guessing or any second guessing. You just either see it on your time frame or you don't. But if you are one that's willing to be a little bit flexible and say, okay, there really isn't that much difference between the 4 minute chart and a 5 minute chart. We're still looking at the same area where we are expecting a reaction. And, you can get a good confirmation on the 4 minute. It's basically the same as a 5 minute, in my opinion. Just like a 1 minute, it's basically the same as a 2 minute. So, when you're talking about a level, that's basically at the same area. So that's what happened. And I'm just going to enjoy my vacation and my holiday. I hope you guys who celebrate Christmas have a Merry Christmas this weekend. And if not, just enjoy the time with your family, if you're with your family. And we'll be back maybe next week if I have some time. And if the markets are moving, I'll take a look. Sometimes we get a Santa rally at the end of the year. So I'm going to keep an eye on the market in case there's any opportunities. And I hope you all have a great weekend.